Hey guys, we love that you joined our community over here on the Flip Flop Flipper, and we're so proud that we're the fastest growing real estate investor groups on the entire platform. But here's the truth. The difference from being in the free group, the Flip Flop Flipper, and coming over to Apex, we're actually doing deals there. And in the short time that we've had the community, we've done several $1 million worth of real estate transactions. And I personally know of at least 18 or 20 deals that have happened. We just finished our first ever coffee and bus tour, and out of that, I'm already in conversations with 3 or 4 different groups of people that are going to do real estate deals together. We just want to be a part of your real estate investing story. And the difference between being in the Flip Flop Flipper community and being in the Apex community, Apex is actually get done. We're doers over there. So if you want to go from being a wanna-doer to actually being a doer, click the button. Let's go. Join Apex.
Hey guys, welcome to Dealmaker Tuesday, or what's the name of this? The Real-Time Real Estate Deals Live number 3.
That's a freaking mouthful, huh?
Yeah, that's
Dealmaker Tuesday sounds better.
Dealmaker Tuesday, I think.
We're always bad coming up with names, but this is a bit different format than like Monday Night Live, and it's not quite a master class, but we're going to deep dive into a few deals. So I think we've got 3 or 4 people that have given us their deals ahead of time, and we're going to bring you up. We'll run through them. We'll talk about what's good, what's bad, what's ugly, what looks beautiful, and hopefully we'll show you how you can present your deal to make it a deal, or what you'd need to make the offer in order to make it a deal. I think Aaron St. John is going to come up first, right, McKenna? And is he going to pitch the Rincon deal?
I think he's going to pitch the Rincon treehouse deal. Is that right? But Aaron,
before he even pitches, I'll tell you, this deal he's got is a winner. This is a really good one. Aaron, are you there?
I am. Hey guys, how's it going?
Hey Aaron, all right.
Hey Aaron.
Woo. Yeah, so I've got Steve, my partner, and I have a deal in Rincon. And I've spent the last couple of weeks just trying to put together some, visual presentations, and I've got some YouTube videos, etc. So if people want more information than just, this sort of quick overview, you can certainly reach out to me, and, I can provide a link, or Steve can provide a link. Additionally, before I sort of just walk you through the house and the deal and kind of our plans, Steve has been on the island for the last week. I am still in Maine, but he would absolutely love to meet with anybody that wants to talk to him about real estate. He's just like all of us, and we'll talk about real estate all day long until you can't talk anymore. So, if you just want to talk, or if somebody is interested in finding out a little bit more, we've spent, the last weeks just accumulating information and working through our plans. So if you're on the island, Steve would love to meet up and would probably buy you a coffee. So, and I, tell him I said that. I don't know if he's on the call or not, but
he is. And Steve, if you want to come up, let us know. Turn your camera on.
So the property that we bought is it's about 1,000 feet from Sandy Beach. It's a 5-bed, 4-bath, 4-unit. There's a little bit of land on the side of it that will give us an opportunity to do some development. This particular deal we got through a wholesaler inside of the Apex community, Emmanuel, and he was able to negotiate a fantastic deal, which in my mind, this being the first deal on the island for me, it feels like it gives us a little bit of cushion, because it's a solid deal. So the house was listed for $1.2 million. We got it for $1.1 million. We brought $150,000 to the table, and the seller is going to finance the rest for us at 0%, and we have a $3,000 a month payment. So the only real scary part or caveat to that, which I think we've worked through all the scenarios that we can think of, but we do have a sizable balloon payment in 6 years as part of the negotiation arrangements. that balloon payment, and I can look, it's $685,000 or something. So it's significant, but it is 6 years from now. And I think with the fact that the house is currently cash flowing, and with our plans to improve the property and then eventually add additional units to the property, we're not really worried about the exit. Like, that's the biggest concern I think a lot of investors would have, like, how am I going to get out of this deal? And anybody that's done any research in Puerto Rico knows that it gets a little bit tricky at that point, because money is not always available. But we think with 6 years to figure it out, 0%, which means every payment that we're making is going directly towards the equity and driving that dollar down. Is just adding equity every single time. Mm-hmm. In 6 years, I would assume it's going to appreciate. It's right in Rincon, and you can see the beach. And then if we add any sort of improvements to the current structure, or add, 3 additional structures, I think that's going to add value, which makes the exit easier. And then the last thing that we're really not even talking to anybody about, but we're working through, and that's Act 60. So there could be some tax credits, way on down the road. So that's kind of the deal. That's kind of the numbers of the deal. In terms of what we're looking to do, Steve and we've split it. So we're looking, Steve and I are going to do the work. We're going to do the renovations, manage the process. We're really looking for passive investors to get us, we're pretty close to the first part. But we've got like this broken down into phase 1, 2, and 3. Phase 1 is us acquiring it and just kind of getting it cash flowing as it is, and getting our feet under us, and doing some minor stuff like changing the sheets and maybe painting and easy stuff that we can do quick to keep it cash flowing, because we're headed into the busiest season of this year for us as well, mm-hmm. right when we're closing. So and then we'll go in and we'll start doing some kitchen and bath renovations on the 4 units, and then the last phase, and we want to do some outdoor stuff and create some experience outside. It's just a parking lot right now. So we'd like to put in a pool and a hot tub and, some trees and a place to sit. And then the third phase would be to add 3 stilted buildings, which would then allow us, hopefully, access to the Act 60 tax credits. So we're looking for passive partners, and initially, we thought that we would go with a little bit higher buy-in, because it's a longer play. So, but after Steve and I have done a lot of door knocking, phone calling, and emailing people, we'd be happy to talk to anybody that, if you've got 20 grand or 25 grand and you'd like to be in a short-term rental play and kind of learn about that as we go. That's we'd be happy to talk to you. So that's that. I've got, I can show you a website. We can go through the slide deck, whatever you'd like, Robbie.
Yeah. So
this is a good deal. I'm so excited.
No, you guys, it's
we've been working really hard.
Great deal on every level, right? Like, so I think your price point is good. It cash flows. Maybe the best part of your deal is 0% interest loan, where every dollar you pay the seller goes directly to what you owe them at the end of 6 years. If you do go the Act 60 way, you're likely to be getting those tax credits around the same time that you need to pay off the seller, which could be a way to get out. That could be your exit.
Right.
Remember, nothing is fast. So have you guys already had the tourism company out to the property?
We did, because we only had access for that one day. Apparently there's it's my understanding it's not a loophole. Like, as soon as we initiate the conversation, they send us the application, and it's called a pre-application, which timestamps where we are in the process. So as long as we get back with them before we close, we should be able to continue moving at the snail's pace that I'm sure it's going to move at to work through it. But unless I missed something.
Filling out the application is it's a bearish,
yep,
mind-numbing kind of, they're just going to ask you for everything in the world, and you just keep giving it to them. They'll keep asking you for the same stuff again and again. And they may do that because they've got nobody looking at it and they're going to lose it, but it's going to take you a long time. Do you have someone who's going to help you with that, or are you guys going to do it in-house?
Uh, I think we're gonna have somebody do it. I think it might make more sense just, somebody that's been through there's a learning curve, and I like to fidget and learn. You know that about me,
Yeah.
but you can't learn everything. Like sometimes you've got to hand something off to the professionals, and this is one of those things. Like, there's a lot of money.
One thing that I would advise is just keep receipts on everything. Keep immaculate books. So make the effort to have all of your money that goes out, every single piece of money that goes out, document where it goes and what it's for. At the end of the day, you'll have to go through it's called an IUP. It's an independent something audit, and it's supposedly you're going to be able to do it quick and easy, but you're not. They're going to look at absolutely every transaction that happens from the day that you purchase it to the day that they do the audit. And what else? I wouldn't call myself a guest house or a hotel until you have 7 units, and then you'd have kind of a line in the sand where you go from, right now you're just an Airbnb. That's all this property is, a cash flowing Airbnb, and that's fine. What you'll want is a delineation from just being an Airbnb to now being a guest house. I'm assuming you're going for the guest house, right? You're going to try 7 units, guest house, and so you'll want to draw that line in the sand as far out as possible. Kind of do the value add. So put the extra 3 units on your piece of land, put the pool in there, and then at the time that you go from just being an Airbnb to being a guest house, you can market the hell out of it and spend money on it. You could have parties. You could do all kinds of things to market it to try and drive your nightly rate up and your occupancy rate up, and you get 40% of that back. So that's a couple things that we learned doing a few of these now, and we didn't market at all the first few of them. We just sort of missed the boat on that. But you can get a higher nightly rate and a higher occupancy by spending the money marketing. And I'd invite at your party, invite the whole neighborhood, all of the other the properties that are around, and you can write that party off. You get 40% of it back. So that's a marketing expense. Yeah. What else? Cool. I saw your video that you did with the AI. You did one for me one time, but then I love those, man. That was a really great. Has everybody seen that? I know you've put it in Apex, but that's phenomenal.
I'm not as camera. I don't have 2,700 videos, Robert. So I'm not as fluent. Like it takes. So this is a way to get the information out without me needing to stand in front of a camera. It'll change. I'll get there. I'll get there.
Like you've got a newscast who's reporting on your project. It's really cool way to do that.
I appreciate that
out there. So
yeah, thanks.
What are you offering to the people that are going to bring the money? How much are you going to raise?
We want to raise $725,000 total.
That'll cover the swimming pool, the 3 extra units, the initial cleanup and kitchen upgrades and things like that.
Correct.
How will the $700,000 get paid back, or what percentage are you giving for that? What are you gonna give the money basically?
Yeah, so it's a percentage. It's a calculation, right? And I can tell you. Give me just 2 seconds. I could probably share my screen, but
feel free.
So we took the total raise. And then we broke that down by percentage so like $100,000 investment, your ownership in the total deal. So the total property would be 7.25%.
Okay.
And then, so that's great. You've got some equity, but then the intent is obviously you would receive proportionally a portion of the nightly rate, right? Once we've covered our expenses, et cetera. So whatever nut is left over, you would see 7.25% of that. With $50,000 investment, it goes down to 3.62%. So, it would be calculated the same way. The rates of returns, by doing it that way, stay the same, right? So we're not necessarily offering somebody, that comes in with $200,000 a better rate than somebody else. We kind of broke it down that way so everyone could participate, sort of, not equally, but equally. If that, I don't know, maybe you can explain
Same kind of return. Everybody gets
right.
the same rate of return.
Right. So, and all of that, and I've got that. Let me see if I can do it here. Share screen. Can you guys see that?
Here you go.
Now
we can.
Okay.
Yes.
So we've broken that down here so that you can see, and as you can tell, like the way that it's going to pay out is going to be, when we exit, whatever the return is, everyone should benefit from that. So this one, I think, is going to be strong. As soon as we can get in there and start doing some renovations, I really think that's going to help. Steve has spent, and Robert, you're intimately familiar with Rincon in that area. And I think that there's some, we can drive the occupancy in the nightly rate with some renovations, like cleaning it up even better than what it is right now. So yeah. On this as well, guys, you can see some, these are just some ideas of what we're thinking about the tree houses. We're thinking some color schemes too, but we're not sure on that. This is kind of what it looks like now. So, we might do the house in this and then do these fun sort of treehouse things on the other side. But there's a full breakdown, here if somebody is interested. And then from here, I'm happy to talk to somebody. And like I said in the beginning, Steve's on the island, and I think last week he put on 3,700 miles or something driving to and like back and forth looking at stuff. So he's been busy down there.
3,700 miles on the island.
20, yeah, he returned, or 2,700. It was ridiculous. He returned his rental car to get another one, and so they had his miles.
Holy cow.
Yeah, he was driving like a madman going to meet everyone. He drove to San Juan probably 6 times last week. So,
wow.
Yeah.
Have you guys raised any money?
We have got some soft commits. We just got, we're working with our attorney right now to get to get all the legal stuff. And we've started sending out some, letters of intent, commitment letters, of subscription letters of intent, if you will. So, and we're hoping we're hoping to start seeing those come back now. It's been tough because Easter Friday was off, so last week was a short week for us. We met with the attorney, most people took Thursday off too.
Yeah. So
Monday was the day after Easter, and there were, some people still had to
go back to work starting tomorrow, maybe.
Yeah. So yeah, that's where we're at. We're 725 is a big raise, Robert. And our concern, Steve and I were talking about it earlier today. Our concern, because we've broken this out and we've talked to people that it's being broke out into 3 phases. We're a little concerned that people are going to hold off, as opposed to jumping in because they think that there's another. But this is subsequent stuff. As soon as we close on the 12th, we're going to formulate our plan to get in there and rip out the first kitchen as soon as possible, which means phase 2 money is necessary, almost as immediate as phase 1 money was.
Yeah.
Something you can do there, Aaron, just as these deadlines come, you can say, hey guys, we're going to close this raise on the 12th. That's when we close. And if you are in, you're in, and you get the phase 1 valuation. But once we close, it goes to the phase 2 valuation. We've already put work in. We already have value, and you're going to get less equity for your money if you're not in before this date. And just let them know, if you want to wait, you can wait, but you're going to get a less return because you're incurring less risk.
Yeah.
I think that's a pretty powerful way to get people to
good way to do that.
perform.
Yeah, without giving away the farm and knowing that I'm on live TV, would you recalculate all this to start at a higher entry point now, knowing that we would be closing in 15 days, like we would be closing phase 1 in 15 days or whatever it is. Like, did that make sense, McKenna?
I missed the first part of your presentation. We've got some technical difficulties backstage that I've been working on.
Okay.
So Robert, maybe you would have a better answer for that.
What's the question? Sorry.
Sorry. No, it's all good. So I like what McKenna said, and in phasing, in doing this in phases, right? If you don't invest now, that's great. You can still invest with us later. But phase 1 is closed. We've closed on the building, and now we're moving on. So you're right. There's less risk. We're not worried about closing on it anymore. We're not worried about X, Y, and Z. So would you want to lever up this phase 1 equity amount for people now? Like $100,000. I'd have to recalculate it. But $100,000 is 7.25%. Like, you give us $100,000 now, and it's 9%, and then we just recalculate everything else out. And then in 15 days, when we've closed on the building and we go to round 2, phase 2, it drops to this. Or would you go even lower than this?
I think, Aaron, I would figure out what your total raise is for the entire project overall, and then figure out how much equity you're willing to give away for that if you got every dollar in phase 1. So maybe it's 10% equity, maybe it's 50%. I'm guessing it's not 10, but who knows? I don't know. Then I would just say, hey, we're raising $10 million. And for that $10 million, it's going to get 50% of the equity. The first funding period, though, closes on the 12th. And at that point in time, we're going to recalculate the equity table and the risk, and you're going to get less for your money. You could know what that's going to be. You could not know, and just tell people you're going to get less, and just take back some of that equity off the table. That's probably how I would do it.
Okay.
And there's a few different ways to structure that, but I think it all boils down to the total raise and the total equity that you're going to give away for that raise, and then just taking little chunks away to motivate people to close.
I would be trying to raise all of the money before closing, or within
I would too.
Of closing. I would want to close the raise out as quickly as possible, and not be raising money forever, right?
Yep.
Like, that just kind of is a bummer.
Yeah.
We've had times where we didn't meet our final raise by the time that we closed, and then inevitably you either just don't end up raising the money, and then you have to fund it, or it really starts to bog down the deal, right? Like, you need to keep the plywood in front of your contractors and keep your plan working well. So I would push as hard as I can to raise all of the money, or as much of the money as I can, right? Either prior to closing or a week or two after closing. And then, you don't have to know what the next phase looks like until once you're done, because you don't want to print something now, get into a situation where you have to have the money, and then you feel like you have to give up more, and you're changing your deal all the time. Having the money all done up front, and like McKenna said, knowing exactly what everybody's going to get is really the way to go. And then not going back on your, like, if you say you're going to lower what they're going to get, it's really important that you keep to your word, and that you don't end up having to walk back what you kind of said.
Right.
Yeah, the valuation always goes up.
That's right.
Yeah. Okay.
And you have a very safe deal here, guys. Like if you're looking for passive income, this is one of the safer deals that I see. I
Not
think
investment advice.
not investment advice, but I like 0% interest money. You're in a plus area of Rincon. Sandy Beach is like, it doesn't get any better than that. What's your downside? There's not a ton of downside. It should cash flow from day one, and then anything you do to the property is going to make it cash flow more.
Aaron, could you scroll the page up a bit?
Yeah, I can try. Up like this way?
Yeah, that's perfect.
Okay. Robert, not to... we're not, Steve and I, we're talking, like Steve and I are on the phone all day long, all day, like we're talking, like we're constantly communicating. And we have, like, that's one of the things that we've talked about. Like, there's not a whole lot of downside to this. Like most other things that I've done, you're always like, well, we're not quite sure about, that we think the roof needs to be replaced. Okay.
Yeah, but you've built that into your $750,000.
Yeah, right. So that's what I mean.
You're already taking an asset that is cash flowing today. The last owners have been successful with it for a long time. They've set you guys up to be successful with it by offering you tremendous financing. Can you tell us what your monthly nut is with the sellers? It's really low, right? Like it's
3,000.
Yeah, it's really low. And they're historically bringing in 10 to 15,000 a month, something like that.
Well, it's right around. They're saying they're saying about $100,000 a year, but we've looked through all. There's some cash going through that deal. I know.
You're historically bringing in $100,000. Your expense to them is only $36,000.
Right.
You're cash flowing from day one.
Yeah.
And everything you do to it should make your cash flow go up. And I do think that you guys have an opportunity to increase the cash flow from what historical has been, because there is room to improve the property without doing a whole lot. Like putting a splash pool in there, obviously putting in more units, those are big ones, but sprucing up the place, making it look prettier with a new paint job, you'd be amazed how that will go. And then the other benefit you get is that you have a client base that's historical that probably comes back year after year after year. So you might lose some of them if you raise the price and things like that, but it's nice to have that built-in kind of base and security. And so you got, if you raise $7.5 million or $750,000 before closing, you're giving away 54.375% of the deal.
Is that what it works out to?
I mean, I just took 7.25% on 100,000. If somebody did that 7.5 times, that'd be 54.375% of the total deal.
Yeah.
Is that right?
It's about right. I mean, it should be 50%, but with the math, but that's close.
Well, maybe I did the math a little wrong. I don't know. You're raising 750?
Yeah, 725.
Oh, so that's why I'm off. Okay.
Yeah.
I'll redo it.
Yeah. But wouldn't that make it go in the other direction, Robert? I don't know. Tell me. You got the calculator.
Let's see. 7.25 times 7.25. Yeah, that puts it at 52%.
That's closer.
56. So you're closer to that 50%.
Yeah.
And I'm just doing back of the napkin math. So it's
and something might be off on these because I've we've worked this a couple of times. So but this is the number right here. Like that's the equity amount for that amount. Like that we've been playing with that number for a long time. So yeah. Well, I
don't know what else to say about this deal. I mean, there's not a lot of ways that I'd poke holes in it. I think as long as people are comfortable with you, Aaron, and Steve, and your partner Steve, he's done a few things. He's a pretty good partner to have. I got to meet him for only one afternoon, but I was very impressed with him.
Yeah.
He's done, actually, I'm being very, very modest for him. He's done a lot. So he's got a wealth of experience, and you've got a wealth of experience in this space of nightly management and rental management. So I like it. I like your team. I like the deal. You're not raising it. You said 725,000 is a big raise. It's really not. It's a big raise because you've never done it before. Once you've done it, it's really not that big of a raise. So, yeah, good job. I love this deal.
Thank you. Yeah, I like it too, and I appreciate all the help, Robert. Apex and the community has been a big part of what I've been doing for the last year. So,
I know. That's why it's so exciting to watch it come together. I mean, it's a wholesaler, Emmanuel, to you, bringing in Steve, and now even going out and maybe getting more partners. That's absolutely what's supposed to happen with a group like ours, right? Like, so we say we're a group of doers, and if you want to be a real estate investor and you want to have your money out there working hard for you, you can make nice returns. And talk to Aaron, get involved with him, and take a shot on a passive investment. I think you got a lot of upside.
Aaron, what's the best way for people to reach out to you if they want more information on this?
Well, if they're in Apex is the first place. If they're in the Flip Flop Flipper, the Flip Flop Flipper, and I can put my in the studio chat. I'll put my phone number in the studio chat, right? Yeah. So yeah.
Thanks a lot, Aaron. Good job.
Thank you, guys. Appreciate it. Thank you.
All right.
Hey, so you'll be on island when you close on the 12th?
Yes. So I absolutely want to hang out, and I'll probably need a place to stay because I think our place is booked. So we'll talk. We'll get in touch.
Stay in Rincon. I'll come join you. Maybe we'll go to dinner or something.
Yeah, I'd love that.
All right.
Yep.
All right. Thanks, guys. Some back of house stuff here, guys. We're having some technical difficulties on the stream side. So if you are in Apex and you're trying to present a deal, there's a link to the StreamYard in Apex. You can join the StreamYard. It should bring you to the studio. I'm going to ask that only people that want to present a deal come to the StreamYard. If you don't have a deal to present, then please go watch it on YouTube, and that way the studio won't fill up. Aaron also leads the Friday morning coffee hour at 9 a.m. Really encourage you guys to go check that out. Who wants to come up next? I know Tiana has a deal. You want to come up next?
Okay.
Hey. Hi there.
She's back.
Hi, how are you guys doing today?
We are well, wonderful.
Okay, I had written down on the chat previously the house that I have in Piedras Blancas. It's a 2-story. It has a 3-1 on the first floor. The basement floor is a 2-1. It has a driveway to go down to the basement floor, so it's like a basement in the front, but in the back there is access. I sent the coordinates because, quite frankly, I don't know the area that much, and also I don't know what the homes in that section of the town are going for. I am considering selling it, or
do you own it now, or you're considering wholesaling it? You have it under contract, or you already own it?
No, I own it free and clear.
Got it.
And it's currently rented.
I just brought it up here on the map.
I requested the tenant to move out so that I can do some upgrades to it and then sell it. I don't want to wholesale it because I own it. But I just wanted your take as to what I can ask for that house based on the location and the comparables in the neighborhood.
Can you tell us what it rents for, the 3-1 and the 2-1?
That's why I want to do the upgrades, because right now it's $350 the 3-1, and the 2-1 is $200. They've been my tenants for like 7 years. This
Ooh.
was a property that I inherited, and and I need to my mom passed away over 3 years ago. I kept the rent the same, but it has come a moment that I gotta start thinking about myself more, and so I need to, update the place so that I can rent it at fair market value.
What do you think fair market value is then?
I mean, as far as rentals, a 3-1 in that area easily is anywhere from 6 to 800.
Okay.
The 2-1 minimum like 450. I would say long term.
So you could get rents from 550 that they are today up to 1150 or 1250, 1150 to 1250 a month.
Yeah, the 3-1 has a carport. The one downstairs does not.
Yeah.
So I have not gone into this house. I don't know the conditions that it's in at all, but I do plan on fixing it if I decide to sell it. I would be doing the value add. Um, I would be doing the value add first, and then moving forward to list it.
Do you know what it's going to cost to renovate it to get those higher rents?
No, I really don't know, because I don't know the conditions that it's in, but I figure I am that may, I don't know. I don't know. It needs a new kitchen, most likely, updated, unless it has mahogany, which used to be what the kitchens used to be made out of. Then I would consider just, refinishing it if it's that wood. Um,
You see,
but
we have a question in the chat. Mike Rusica is asking, can he rent from you? I think you'll find a lot of people that would want to rent from you for what you're renting it now, but even
Oh
even
yeah,
you
I
fix it up,
know.
it'll be easy to rent.
I
How
you
does the
know
house look? Do you have any pictures or?
I don't have pictures currently. No, the tenant is moving out in May.
Oh, okay. Both top and
Let's just
bottom, or just
assume that
one?
it's in bad condition, hasn't been renovated in 20 years. You would think that something in that Aguada, Rincon area, a duplex, probably is worth anywhere from 200 to 300 plus, just depending on condition. Wouldn't you think?
I
I
think
don't
it could
know.
be
I
lower
thought
than
it
that.
was.
I think it's
I
depending
was
on
under
the.
the impression that it was much less,
Much
Yeah,
less.
I'm thinking it's
like
110 to
140.
150
Okay.
110 to 150 sounds
fixed
more
up.
like it.
110 to 150 fixed up. If you do it nice, maybe it's slightly more than 150. If you just did it on rents, $1,150 a month in rent, it's probably worth 115, 120, something like that. But again,
Makes
that's fixed up, right? Like that means you've put in the new kitchen and probably
And a
updated
new
the
bathroom
bathroom. Yeah,
and
you don't have
paint.
to worry about AC and stuff, but you're going to paint it inside and out. If you have doors that are broken and windows that aren't working, you're going to replace that kind of stuff, which could mean, without seeing it, you got to figure you're going to spend. I would think you're going to spend a minimum of 25 grand, but it could easily become 35 to 50. things have definitely gotten more expensive to renovate. So if you were to sell it as is, and we're sort of guessing, we're flying blind because we don't really have the address to pull up exact comps.
We've got the location here.
We could pull up comps just based on a pin location.
I was looking at for sale on Zillow. I don't have a good comparable website though for Puerto Rico, and I know Zillow doesn't have the best data.
Find it PR.
Find it PR.
Yeah.
Okay.
Try that. It should have some good stuff. It's not the best either, but I think it's a little bit better than Zillow.
So you're kind of, Tiana, the question is, do you want to sell it to someone who's going to take on the work and they fix it up on their dime and they get to realize some of that equity, or do you want to fix it up and spend 20 or 30 or 40 grand?
I
do
think
it?
I want to fix it up because I figure I think I want to fix it up because I figure that it's either decision whether I sell it or I move forward to re-rent it. It's still a better deal to have it fixed. I'm not sure because I'm not really aware.
Are you living near there? Are you on the island?
I am. I don't live near there, but I do live in Aguada.
Okay, well, you live pretty near there though, because the water.
Yeah, I mean, yeah, it's a 10-minute drive. So
Right.
yeah, I live near it. It's just like in my mind, near would be like an immediate.
Walk across the street.
Yeah, I'm on island time and on island distance.
So it's
So
certainly worth
going to
going
San
over
Juan
to
is
see
like
the condition.
the other world.
I know, it's amazing, right? Like going to San Juan from Aguada, that's like, oh, we can't,
And
we
when
can't
I'm
go
in
and come back
Florida,
the same day. Yeah,
when I'm in Florida, going to Tampa is like next door.
yeah. So I think, getting a scope of work done, and I guess you're going to do this after the tenants move out in May. You'll have a
Yeah.
vacant house in May. Is that what you're saying?
Yes.
Yeah. So I think, most of the time, guys, you would say that it's better to have a tenant in a house. But when the rents are so low, if they're going to leave, I think in this case, you're way better off getting the tenants out and then just go over and see what you've got. And they've been living there for a long time. So you have to assume that you're going to be replacing doors and windows and floors and paint inside and out, and certainly kitchens. You probably have to do close to a full renovation, even though someone's living there. I mean,
Yeah, I agree. I think it's gonna be a complete project is my take.
But if you were to try to sell it right now, needing, let's say it only needed $35,000. I think the way I was running my math, you're probably selling it for $35,000 or $40,000 as is, versus if you put $35,000 or $40,000 in it, you're selling it for $120,000 to $150,000. So you have a lot of upside. And if you're not stressed for cash, I'd renovate it, and then you can decide whether you want to keep it longer or sell it at that point, but you maximize your return.
On a house like this, that right now I pay like on taxes, I pay like $700 a year.
Yeah.
Would you think that it's better for me to like get some money and use that money to continue this journey, or should I just like stay put and re-rent it to like market value rents?
Do you think the house is in good enough condition that you could re-rent it?
No, I'm gonna re-rent it.
Okay.
If I fix it and I decide to keep it, I'm gonna re-rent it, but I'm not sure if I just want to fix it and sell it forward and get my money and then continue using that money to
Fine.
invest.
Yeah. I think that's a very personal decision, Tiana. So the thing that I look at to make that decision is if I leave the money in that house and the equity that I have, what would I do to recoup the kind of cash flow that I can get from it? And what's my return on equity? Those are the calculations I would run. So your equity is going to basically be everything above what it costs you to renovate it. So let's say it costs you 50 grand and you have 50 grand in it and you can rent it for $1,150 a month. You're getting an excellent return on your 50. There's no doubt about that. That's what would that be if it was 1150 a month?
Pues ni idea, eso pensaba yo también, pero aquí cuando no me deja continuar, se me pongo la información de los testigos.
You'd be getting a 27.5% return on your 50 grand that you're going to spend to renovate it, which is an excellent return. So then the question is that a good enough return for you? Are you happy with that? Or would you rather pull back your 50 grand that you spend to renovate it, plus another $60,000 or $70,000, let's say.
Okay.
And it really comes down to a personal decision because you're certainly making enough cash flow on 50 to keep it.
Okay, that makes sense. So $11.50 on a $50 renovation gives me a rate of return of 7%.
27%.
27%.
It'll be a little less than that because you'll have expenses.
Okay, that's
your gross
a
return
great
will be a very
that's a good
high.
return. That puts it
Yeah.
into perspective.
That's a really good return on 50K for sure.
Yeah.
Even with taxes and
no taxes on long-term rental.
Making a big return. What?
No,
There's no taxes on long-term rental income.
No taxes, property taxes. I'm talking about. She spends $700 a year to own the property. She said.
Right.
Yeah, that's another thing is you don't pay any income tax on that rental income. So that $13,000 or $14,000 a year that you're going to bring in rental income is tax-free money.
That is tax-free.
Tax-free.
Versus paying 20% on it, which then makes the rate of return even higher if you think about it.
Yeah, so if you were to sell it, you'd pay long-term capital gains, which is about 20%. If you had, say you had $60,000 or so worth of capital gains, so then you'd lose 12 grand. You'd end up at like 48. Yeah, I think it's a good candidate to keep actually, but I like keeping things, so I don't want to sway you. And I know, there's also the other factors that I would have would be for you. How quickly could I find something else that would make at least the same kind of rate of return? And what are your long-term goals? Like, do you want to trade up and buy something that's going to cash flow more, or are you happy with the 20 plus?
I'm happy with 20 and not worrying about. Okay, that this helps.
Yeah, good. I'm glad.
Awesome.
That's a pretty easy way to evaluate a deal too, guys. We don't need to know what it's worth. All we need to know is what kind of return you're going to get on your investment. And because I think 50K is enough money to renovate a small house like that. Your return on 50K is phenomenal. So you don't even have to know necessarily what it's worth and all of that stuff. Just how much money am I going to make on my money? And that's a calculation we use quite often. It's like I kind of first look to, if I put this amount of cash out and I can get that return on it, do I care very much if it has a ton of equity or not? And the answer usually is no, right? Like we came to the island of Puerto Rico, we were buying things for cash flow, and we weren't even.
I'm gonna step out so that somebody else can come in.
Awesome.
Thank you.
Thank you.
Thanks. Good talking to you. Niels, are you ready to come on up? But if you want to finish your thought there, Robert, I think that's a really good one. Just the the idea that you can buy property based on cash flow is very powerful.
And you can't do that in every market, right? Like, so here it's very hard for us to buy a rental house in Orlando, Florida, and have it cash flow at that kind of rate. I like to keep things where my money's making 20% is kind of the golden number. If I can invest in a rental property and get a cash on cash return of 20% or more, I usually want to keep that. That means you get your money back in 5 years or less. So, Niels, turn on your
Niels,
camera.
how are you?
There she is.
Hello. Hi.
How are you?
Good. So there is this one place in Country Club, Carolina, and it's an Airbnb. It's turnkey. They already renovated it. They bought it. They renovated it all. They're saying that it's making them about $3,000 a month at $100 a night. And they're always packed. They're saying that they always have people. It has
That's
two
dangerous.
places. Huh?
That 100% occupancy, that's a dangerous metric right there.
She's saying it's for a few nights.
Yeah.
But she also does her own cleaning, so she's getting the fee from that too. And then they have three bedroom, 1 bath, and they have 1 bedroom, 1 bath in the back. And they're living in the 1 bedroom, 1 bath in the back. So that will be another source of income. Because if I were able to get this, I would just put it down as renting both for Airbnb.
Both units.
So the only little problem is that there's a Chinese New Yorker that's being very aggressive, and he wants it. And the owner said that by tomorrow they're gonna make a decision, and they're gonna give it to him if me or another guy that sold the place don't come up with an offer. And so I was doing the numbers, and I see that it will be about $1,500 more or less for the mortgage, and let's say like $500 a month in utilities, $300 miscellaneous for whatever. I haven't done my numbers like down to the last cent, but altogether will be like $2,300. And very conservatively, because I always say, well, what if there's only like 10 nights a month that where you get people coming in? So that's how I do it, with like 10 nights. So it will be about, the revenue will be about $4,000 minus the $2,300 of expenses. That's a revenue of $1,700. So what I need, I will put down, okay, I can put down 20,000, right? But I would like to do less, because I feel like the place needs a little bit of touch. Like it needs like a nice yard. You know, I'm a party person. Like I love to have barbecues and all of that. So I feel like it needs that. It needs the furniture for the back, like grill, a jacuzzi. I don't know if I'm gonna be able to get a jacuzzi, but the way they're making the money is the way it is right now. They're not offering any of that. The place inside is really nice. It's all AC. It has AC in all the rooms. They're actually renting only 2 bedrooms in the 3 bedroom, 1 bath. They're only renting 1 room they're using for storage. Oh, by the way, Mike Russica went straight from the airport to see this house.
Oh, really?
Mike's yeah, it was really cool.
Great. Okay.
With his wife. Yeah. But he didn't like it because the houses were too close to each other. And I think he likes more space and more more land and something a little bit more spacious. But I told him, I said, most of the houses in Carolina are this way.
We like 0 lot line houses in Puerto Rico. That's a very common thing. Houses are built exactly next door to each other. It's even common for houses to share a wall.
I hate those though. I like to have at least a little bit of space in between.
Mm-hmm.
And this one had a little bit of space in between. It wasn't wall to wall.
Yeah.
So I'm just looking, I would put down, I don't know, maybe from 10 to 20. And what I need is someone to sign a partner, maybe like a silent partner. Like, don't bother me, let me do everything.
Niels, what are they asking for it?
They're asking, well, they were asking 245. They were going down before 230, but then the Chinese guy came in and he brought it up to 238. And so I guess I will have to offer 238.
And then, are they doing any kind of financing, or you need to go get bank financing?
They want the cash, cash or finance, but they want their money.
The
They don't.
cash
They don't
deal.
want sellers finance.
Okay. So that 10 to 20 down, that would be for a bank loan, is what you're thinking?
No,
Yeah.
I'm taking that from my 401k, which is expensive.
No, that
Because
it would be for a bank loan in order to get financing.
I
That's
guess,
what you're
well, the
using
down
it for?
for the down part of the down payment, I would think. But however, that's another thing, like under whose name it would be, or if it would be under an LLC. Because I was telling Mike actually that when you're a first-time homeowner in Puerto Rico and you're a resident, you pay 0 taxes, property taxes. For as long as you live in the house, it's your primary house.
But you're
0
not
taxes.
talking about having someone live there. You're thinking of buying it with a conventional loan, but it wouldn't be someone's primary residence because you have it on Airbnb.
Oh, they would not consider that?
They definitely won't consider they won't.
Oh,
and
okay.
and it'll be very easy to see. So I'd be careful with that.
Okay.
You guys heard of this Letitia James person who she's in trouble right now. She's a politician lady in New York that did something like that, bought something saying it was her personal residence when she was a politician in New York City, and she bought a house in Virginia, and now she's in trouble for it. So
Trump is loving that. Yeah.
Well, yeah, she went after Trump. Now Trump's going after her. So that's a big mess. But I'm just saying it's something that's very easy to see when you're not living in something and you have it on Airbnb. So I'd just be careful of that. And you can get a conventional loan and not say that it's your personal residence. So, yeah.
So going back to the numbers a little bit here, you've got $3,000 a month if at $100 a night if you can rent the house 30 days a month.
Yeah, but
I think
that's
units
now, McKenna. So we're increasing that
to
nightly rate probably to $200 a night. Niels,
so if we did $200 a night, I think wouldn't you say that 15 days a month is probably what you would underwrite that at, Dad?
Yeah, because you don't know. Right now is good, right? Because the summer is coming. Bad Bunny is gonna have. She's saying whenever there is concerts in the Choliseo, she's saying they wish they had more space for more rooms because it's like people are like fighting themselves over booking. And it has the potential of turning one room in the 3 bedrooms. You can make like an entrance on the side and turn that into a studio, but you will have to build a bathroom for it.
Yeah, so now you're spending more money renovating.
Potentially.
And what are property taxes in Country Club? Like $700 a year?
It's not much.
Probably $700 twice a year, $1,400
twice a year,
something like that. Going off of Niels' math, if she thinks it's going to bring in $4,000 a month, how do you get to that, Niels? How do you get to the $4,000 of revenue, gross revenue?
So that will be renting both places.
Yeah.
And the 3-1, that was the owner that said to me she's getting $3,000 a month, and she's saying there's only a few nights in between that are not getting rented, and she's also doing the cleaning, so she's pocketing the cleaning fee.
So does that $3,000 include the cleaning fee?
Probably.
Okay. Are you going to do the cleaning, or are you going to get a cleaner?
I would do the cleaning. I'm okay with that. And I would do the management too. And I guess I could include that as part of the deal where, I'm not charging extra for the management because I live close to it. I live like 10 minutes away.
Would the seller accept your offer subject to bank financing and full appraisal and all of that?
Well, I didn't put the offer, but the realtor wants me to buy it because she's gonna get a larger commission if I buy it. And she likes me. Like we were talking for like an hour and a half yesterday, and she's like, she doesn't want the Chinese guy because she finds him too aggressive.
Okay.
So she's holding off. Like the people want to accept the offer from the Chinese guy, and she's holding off. She's making them wait. She's making them wait.
So you have a extreme time crunch, and you need a partner who can come in and get the bank financing. You could put the down payment down. The property could cash flow. Yeah, somebody put in the comments, have you asked to see the booking records?
I did. They
And
said they were going to provide it.
Okay. So
yeah.
I think that the revenue of $4,000 a night, what you have written here on school is it's $3,000 for the 3-1, and then $1,000 or $1,200 for the 1-1. I think it seems a little bit high, but even if we go with that revenue and we take out the expenses of, $200 a month for property tax, you're doing the management, you're doing the cleaning. What other expenses? Maintenance is probably
The highest
$300 or
expense
$400 a
I
month.
know. The highest expense I know is going to be electricity because electricity is going to go up. Oh, and then I will have to get a big power plant running on gasoline.
Generator. Okay.
Yeah, a generator, which they have, but I think they're not going to leave it.
Guys, I actually think that $100 a night on a 3-bedroom, 1-bath in Carolina is not super high. My guess is that if you made it night, certainly if you had a generator, you could probably get more. So if you're talking about a place that's going to sleep,
I don't think the nightly price is high. I think the 30 days a month is
30 days a month, you can't expect. You got to expect 70% occupancy, and you want to get to an actual higher figure at a 70 or 75% occupancy. If you're running it close to 100%, they're selling it too cheap.
Yeah.
For sure. And there's a sweet spot where you get to $150 a night and you're at 75% occupied, you're making more money, you have less wear and tear, and your job on you where you're going to do the turns and cleaning it all the time is a lot easier too.
There's definitely the potential for bringing it up because inside is all renovated. It has AC in every room, the living room. Appliances are new. The whole place is basically brand new inside.
Yeah.
And it looks nice. It looks
What
nice.
do you think is a good expense ratio, Dad, for this kind of project for an Airbnb? 40%?
No, if she's going to run it herself and do the cleaning and stuff, nowhere near that. I think.
No, because there's not much to do to it.
With electric, taxes, maintenance, all of that?
It's kind of self-sufficient, the place. Unless the only thing would be like maybe fixing the yard a little bit because it's one area for the apartment.
Our Airbnb is at 30 to 40%.
And you have a manager.
Someone to do everything.
Okay, so let's do a 20% expense ratio.
I don't ever lift a finger, and we don't normally hit 40%.
Okay, at a 20% expense ratio, that's $33.60 a month in profit, is what you're thinking. That'd be $40,000 a year. If you were making $40,000 a year on $238, if you were going to pay cash, which I know. I guess we're not including a mortgage payment in that number either. That would be a 17% return if you paid cash for the deal, which if you were going to go raise the money, obviously you need equity, your investor needs equity. That would be tight on a purely cash transaction. If you were able to get the mortgage, your numbers probably work pretty well if you can get the financing. If you get a financing partner and you each put $10,000 down, I imagine you don't make a ton a month. What do you think a payment on 20 or 230,000 is right now? It's probably like $2,000 or $1,700 a month.
She said earlier, I wrote down that she thought $2,300 a month in expense, and $4,000 a month in revenue. So just going on her numbers,
1,700
and I
in
would
revenue.
assume actually that the relationship would be that someone brings their credit and Niels puts down the money to purchase it. So Niels has to come to the table with that 10 to 25,000 bucks, and then you'd split the profit. And each of them would be bringing in roughly, just going off $4,000 and $2,300, $4,000 a month in revenue, $2,300 in expense. It's still about a $10,000 a year profit for each partner, and that's not nothing for someone who
that
gets
$2,300
into a deal.
included a mortgage payment, Nils?
What is that?
The $2,300 of expenses a month, that included a mortgage payment?
1,500. Yeah.
1,500. Okay.
Yeah. So I mean,
Yeah, I have
those numbers
the
are right. It's worth doing for somebody. If
the
there's
mortgage
anybody out there who would like to get involved in something and be the kind of the funding partner, go to the bank and get the loan. Niels puts up the down payment and you guys own it together. Niels, you talked about structure earlier. I don't think you'd buy it initially in an LLC. I think you'd buy it initially in the other partner's name and you'd do a traditional joint venture with them. Maybe you shift it to an LLC down the road, but that's how I'd structure the deal. I will warn, I don't like buying properties based off of Airbnb numbers unless I can see like their books, and someone said that earlier, like look at their books and make sure that they're not just selling you the dream.
Well, I would say like I would have to say contingent upon seeing
absolutely it has to be contingent on seeing the books, and they need to see the books not just for a month or two, right? Like you can't just say, all right, in February, March, and April we did $3,000 a month. This is like the busy season.
They've been doing it for 4 months.
Oh, that's it?
They've only been doing it for 4 months?
Yeah.
Oh.
And this is the busy season, so their books are going to be good. If you don't have a year worth of books, I don't think you can buy it based on Airbnb income.
I don't think
I would
you use the
everything on a long-term
DSCR
rental
loan
income
either with 4 months.
Say that again, Dad?
Like I was thinking one way to do it would be a DSCR loan, but I don't think you could get a DSCR loan based on 4 months worth of books. That definitely shoots a hole in your
2 years, I think, for DSCR.
I think you need 2 years. Yeah.
Yeah.
I think there are partnerships to be had like this. You may have trouble making this one work because you don't have a lot of time and they're trying to make a decision.
Yeah.
And you're not able to get the loan. You have the money to put down, and you've found the deal, and that's valuable. And I think there are people in Apex that would bring their credit to the table and do that kind of a deal.
Okay.
And so I would continue to make the posts in there and find that person. Find the person who wants to partner with you, and then find the deal. And then don't put yourself under the pressure of having to make a decision overnight, especially since you're in this case you're paying basically close to retail on the property. You're not buying anything with a ton of equity or anything.
Right. Yeah.
So maybe there's
the problem is like the prices are still insane. There's someone asking $305,000 for a house in Country Club. You know, those houses are small.
Yeah.
They're not big houses.
Yeah.
Well, there will always be people asking crazy amounts for their houses. That's never going away.
I thought there was a possibility of going kind of a little bit tight. Providing like because they're saying they're giving me really good numbers, right? Doesn't mean that every month is going to be a great number. And they do have 4 months only, but that's why I don't want to charge anything for managing. Like I would put that as
what you're offering to be a very, very good partner to someone. You find the deal, you're going to put up the cash, so you've got a lot of risk, and you're going to do the work.
I'm a giver.
Not charge for it. That's a very reasonable. If you were coming to me and saying, "Hey, I'll do all of this," and I was that person who was going to put up my credit, I would feel very comfortable with that.
Well, and then
you're definitely putting skin in the game with both equity and the work.
I was talking
equity and real equity.
I was talking to Nisha briefly, and she mentioned something that was so clever, which is, what is the exit strategy? And I'm like, oh, I didn't think about that.
Hey, Mom.
And I'm like, what would you say? What would be the exit strategy? Just to, in 5-7 years, pay off the other person?
Yeah, so that's a really good point, right? What is your exit strategy? I think you're going into it with a 5-year plan, and at the end of 5 years, you guys are either going to sell because you've got a bunch of equity and you want to cash out, or it's going really well and you continue down the road of cash flow. That's what I would think. You'd build up some equity certainly over the next 5 years, both by paying down the mortgage and just because things will continue to appreciate in all likelihood. And then if you wanted to keep it and they want it out, you'd buy them out, right? Like, you'd need to figure that out. I think you'd need to, another reason why this one's probably a hard one to do is you have to find that person and spell out what your exact plan is going into it before you get involved with each other. There's nothing worse than getting into a partnership where you halfway have figured out what your plan is. Like, no, hey, we're doing this for 5 years. We're doing this for 10 years. Our plan is that we're going to keep it on Airbnb for this amount of time. We're going to take the cash flow as our capital throughout the years, and then we're going to liquidate, or we're going to at least look at liquidating in 5 years or 7 years or some timeline down the road. And then also have something built in to where you say, hey, if somebody wants out, how would you buy the other person out? That's really important. I'm in one right now where we're on Airbnb, and I'd like to get out, but we didn't do our paperwork in a strong enough way. So I'm kind of in for the long term. And
can we switch? I'll take over.
Well, you want to switch with me? I'd get out for the money that I got in it, and the place has equity. It's a 3-unit in Vista Mar, and
oh, that's close to me.
Yeah, close to you, very close to you. It's a very nice place. We bought it at the foreclosure sale, so I know we bought it right, but it's not making any money. And my partner wants to stay in because he believes he's going to make money, which hopefully he will. But I'd rather just sell it. I think right now.
But what is it? It's not renting? It's not renting?
No, it's on Airbnb. It's renting. It pays for itself. So we have a mortgage on it. We don't have a ton of money in it at this point, but yeah, I think Adon and I have $60,000 or $65,000 combined in it. So yeah. So learn from my mistake. I could have done a better job on the way in, and we would have had a way to exit out if one person wanted out and one person didn't want out. So
can you have an exit strategy and always change it as you go along?
As long as everyone agrees, you can.
Yeah, I think you can have timelines built in where you're going to decide together what to do. My thought is that if you get into something with a 5-year timeline and your partner wants out and you don't want out, then you'd need to either buy your partner out or just sell it, and then you both get out. And you need to stick to your word when you form these partnerships. It's super important. So
yeah.
I have a deal right now, and the way we did that, it's a 7-year deal, and in year 7 we have a big balloon, so we need to decide, are we going to refinance or are we going to sell? And the default choice is sell. And we're going to make that decision, though, together in year 6. If we can't agree, we've already agreed to sell. But if in year 6 we both agree to refi and stay in this house because of market conditions, mortgage rates, whatever it is, then we have that option as well if we're both on the same page. But we do have the default path that's going to happen if we can't agree or whatever it is. We're just selling. That's how
you find that 7 is the good number.
No, it's just for that deal. I have a 7-year balloon on some seller finance.
So the bank kind of set that up. Right?
Yeah.
Or the in this case a seller financing, he has a balloon payment, so it forces them to make a decision.
Exactly.
I believe your partners with someone in Apex with that, right?
So will you say like
it is an Apex partnership.
Thanks.
So you say this is a yay or a nay?
I think it's close. I certainly,
Depending on the
if they
partner.
said you have to buy it tomorrow, I'd say no.
So this is what I think, Niels. I think your structure, I think offering to bring to the table is solid. I find the partner.
I'm sorry. You're cutting off. Say that again, please.
Can you say it, McKenna? No.
Yeah. So I think he's saying that what you're bringing to the table is a really good offer. You're going to partner with someone, you're willing to do all the work, you're even willing to put the down payment down.
Mm-hmm.
That's a really compelling offer. And I'd start having conversations with people about this deal on that offer. And then that way, even if this one doesn't happen, you still have already started talking to people about it and being like, hey, this next deal that you haven't found yet is very similar to the previous one. Are you still interested in trying to do that? And then on this one, if they say tomorrow, Nils, you have to buy it or you don't buy it, tell them no. But if you could get this contingent on financing, no money at risk, contingent on financing, contingent on the books, even though they've only had 4 months, contingent on all of these things, I don't think it's the worst deal to go under contract and at least try and set up a partnership. But I would not risk any money to do that, right? Like I'd say, okay, I want to put $500 in escrow, and this is contingent on financing.
Oh, you're saying like a wholesale, but without getting the fee of like putting it on hold for 2 weeks until I get the buyer? Is that what you're saying?
It's not a wholesale. It's just a purchase contract. And
yeah, just a regular purchase contract.
You find your partner during your inspection time, and then you'd also have the bank out. So if the bank for some reason doesn't appraise the property or won't lend on it, you can get out of the deal.
Yeah.
And
then Aaron St. John said, call me tomorrow and we can evaluate the building. So that's very nice too.
And that's only 2 weeks I got to do all of that.
It's a negotiable thing, Niels, but they're probably not going to give you a ton more time than that.
Yeah.
Oh God. Okay.
I think it's worth.
I think your timeline's a bit off for this deal.
Yeah.
Because if you had the person who was going to go to qualify for the bank and you were already talking to Ace Land Mortgage with them, knew what you qualified for, that would be a more favorable plan for you, because then you could say, hey, we're qualified for this loan. I've got the deposit money or the down payment money. My partner's going to get the loan from Banco Popular and we're ready to go. That's a much more secure offer for you and for the seller. So I would use this as an opportunity to find that person who's willing to go to the bank. There are a couple people in Apex or in the flip-flop flipper community that we've recently talked to that have a VA loan they could get, or that one guy we talked to last night is going through an FHA class to qualify for some down payment assistance. There are people in our community that want to use their credit to start investing. Those are the people you need to identify and find.
Okay, send me the list.
Ask in Apex who they are. Let them tell you. They'll tell you. They're there. I'm sorry. I talked to the guy yesterday, and I don't remember who I talked to, or I'd tell you his name. If I think about it, I'll text you. A couple people that are possible, that possibly would be open to that kind of arrangement.
Well, I guess I'll have it ready for the next one, because if these people are going to be, hard asses about getting an answer by tomorrow, we're not talking about $100,000. It's $238,000.
Yeah, it's a big number.
Yeah.
So I think your timing is a little off on this one, but
yeah,
the concept is solid.
Yeah. Okay. Well, thank you so much.
Okay.
I very appreciate it. Thanks, both of you. Bye.
Thank you,
Bye,
Niels.
Nils.
Okay. Bye-bye.
Don't give up. You'll get there. Who's next? Someone had to jump off for another call.
I think that's the end. We're 22 minutes over time here.
Oh, we are. Okay.
Yeah, it flew by. But guys, thanks so much for tuning in this week. If you want to come on next week, the link to join Apex is right here. It's in the chat. Love to have you. We're doing deals like this in Apex all of the time. That thing that Aaron found, that's not the only one out there. The deal of a lifetime happens every day. We're trying to do it. We'd like to partner with people that are also trying to do it. So let me play a quick message from our sponsor, if you don't mind.
Hey guys, we love that you joined our community over here on the Flip Flop Flipper, and we're so proud that we're the fastest growing real estate investor groups on the entire platform. But here's the truth. The difference from being in the free group, the Flip Flop Flipper, and coming over to Apex, we're actually doing deals there. And in the short time that we've had the community, we've done several $1 million worth of real estate transactions. And I personally know of at least 18 or 20 deals that have happened. We just finished our first ever coffee and bus tour. And out of that, I'm already in conversations with 3 or 4 different groups of people that are going to do real estate deals together. We just want to be a part of your real estate investing story. And the difference between being in the Flip Flop Flipper community and being in the Apex community, Apex is actually get done. We're doers over there. So if you want to go from being a wanna doer to actually being a doer, click the button. Let's go. Join Apex.
You guys, I hope you guys enjoy this format that we just did. That was 3 very different deals, three very different ideas on how you can be a real estate investor. I think each of them had merit, and next week we'll have different deals that we deep dive. And this is, for me, this is fun. This is what I like to do. I like to try and find deals. I see deals everywhere, right? So I'm always trying to think about how to turn something into a deal. And so it's a fun challenge to do this kind of format. So guys, give us a like. There's like 35 or 36 of you watching us and only 12 or 14 likes. So go ahead and give us a like and let people know what we're doing here. Invite your friends, invite anybody who wants to get out of the rat race and get to financial freedom. Let's do more real estate together. God bless.
Awesome. Thanks, guys. Bye.